Well, hi, everybody. This is John Jay. Thanks for joining today's May 22nd. We're going to talk about the IRS today. I have categories of videos that cover these subjects. We have LLC strategies, we have crypto tax categories, we have a series of videos on debt collections, all these strategies. You'll see sometimes the different mechanisms are integrated throughout every group of subject we're dealing with. The common thread seems to be using LLCs and so forth. We can talk about that a little bit tonight, but I want to talk about the IRS. So aceofcoins.club is where we have the different subscriptions. Aceofcoins.com is still a way that you can contact me and get on my calendar. I have a consulting program still. Tonight, I want to talk about looks like there's a resurrected wave of letters from the IRS regarding those with virtual currency or cryptocurrency. And so the IRS has been sending out letters, and these letters have a number on them so we can identify them. In fact, you can find them on the internet. So I'm going to show you real quick what they look like. And so my point here in this discussion is to explain to you how to analyze a letter that would otherwise, let's say, terrify you, right? Or would make you concerned, maybe to a point where you would maybe want to call an attorney, your accountant, or somebody. And I want you to be able to analyze a letter like this, because if you call your lawyer or an attorney because you got a letter like I'm going to show you right here, they'll try to scare you more, and they'll give you stupid advice, and you'll find yourself paying money when you don't need to. It's really disgusting how this works. And so that's really why I do this work, even because I just want to show you guys how to analyze this stuff so you can think like I do. So you can think, you don't need to know what I know for 32 years. You can look at the stuff, and I'm going to show you how to analyze what you're looking at. So let's see here. I'm going to go into this little option here, share screen. Here we go. Yeah. Yeah, here we go. So let's start with an example of the dumbest people in our country, lawyers. For as much schooling as they have, the ratio of their intelligence is way down. It's probably the lowest, okay, for the schooling that these people have. And so the type of letter I'm talking about it's a letter that says, hey, we think we're the IRS, and we think that you are using cryptocurrency and that you may not be reporting it correctly. So you should call us if you think maybe you need some help reporting it correctly, and you should call us or have your attorney contact us or your accountant at this address, and we'll set you straight. So this is what the lawyers are saying. Now they're promoting their services. So most lawyers, if not all, use fear and play upon your ignorance. And I'm not saying you're stupid if you're ignorant. I have ignorance on certain things. That just means you don't know something. Okay, so what? There's a lot of things I don't know. So they play on your fear and ignorance, and they exacerbate it so that they can get you to call, then get you to do what they recommend because you don't know any better. Okay. So it says here the IRS is focusing more resources on identifying crypto users who are not declaring their activities properly. That means nothing. A few years ago, there was 10,000 letters. Okay, so out of all the millions of people in cryptographic currency, the IRS sent out a measly 10,000 letters. And that was back when they had, 50,000 more people. Remember, a lot of people left the IRS recently. So here we are in 2025. So I'm going to show you this. So there's a 6173 letter. And then so the lawyers are telling you now, this is going to be uniform with any lawyer you talk to, it's going to show you this, okay? He's going to tell you this. If you get a 6173, don't ignore it. This letter requires your attention. If you receive it, it's that the IRS believes you did not meet your US tax filing and reporting requirements. That's a lie. Let me tell you, this 6173, when I explain the whole thing, you're going to find out that the IRS does not even know who got the letter. It's not expecting anything from the person who got it. There's no tracking, and it's not part of your individual master file or your business master file from which any tax liability would be calculated. So it goes on and on and on about all this, trying to scare you and all this. 6173 is one form letter. What if you don't respond? That might lead to an audit. Bullshit. It's not going to happen. Okay. Similar letters to the 6174, 6174A, right? Another, I'm not going to read this stuff to you. I don't like when people read stuff to me either. So, but anyways, you get the idea. We're here to help. Look, this website right here is a sales pitch. This is what I tell my children, I tell my clients, it's important to recognize when you're hearing or reading a sales pitch. Doesn't mean you shouldn't hear it. It just means you should understand what you're hearing. Okay. It's a sales pitch. So it's always going to end like this. Always from lawyers. They scare you with nonsense, lie. They're lying. They know they're lying too, by the way. This is quite obvious stuff. And in the end, we're here to help. You don't have to do this by yourself. Just contact us and we'll help you. And then what they're going to do is get full disclosure of your cryptos because you don't know any better. And they're going to have you file some stuff with the IRS. And next thing you know, you're going to end up in a payment plan of some kind based on accrual-based accounting or whatever they come up with, whatever scheme they come up with. Okay. So what's my recommendation? We'll ignore the letter. I'll show you why. Let's go look at this. Let me see here. All right. So let's look at this 61 before I continue ranting. Does anybody want to say anything? Did I talk too fast there? I'm going to go to the 6174. Just pick that one. All right. So in the 6174, here's what it looks like. You see? So they will have your name here. And it'll look like, it'll be your name in all caps, which is meaningless. I'm just saying it's an indication that if the font of the name is not going to be similar to the font of the letter, it just means there was a mail merge. It's quite obvious. I mean, it doesn't have to be that way, but these guys are sloppy. So it's quite obvious that it was a mail merge. So the IRS really, someone ran a mail merge. Someone has software on the computer, did a database of taxpayers, okay, from the IRS database. This information that the letter came from, this information had nothing to do with reports of income to your individual master file or your business master file. Those are the only things that cause the government to have to do anything. So this letter is not that, okay? Now, it says we have information that you have or had one or more accounts containing virtual currency, but may not know the requirements of reporting. What is this? You can say this to anybody, right? After reviewing the information, if you believe, right, you didn't accurately report, this is trying to induce you to contact them and do something, okay? They want you to file tax returns. That's another thing too. I mean, the IRS publishes the definitions of the terms it's using, but no one reads them. Like, for example, the definition of its use of the term purchase cryptos does not mean that you took dollars and bought cryptographic currency. It means that you took your own cryptographic currency and bought those current cryptocurrency from somebody else. Okay. So that's a purchase, but buying cryptocurrency, virtual currency with dollars is not a purchase of cryptocurrency. Okay. And it's talking about all this reporting, all this jazz, right? Now, remember, let's see here. This says, all right. So it's getting you to fill out forms and all these forms. I mean, you're going to do your 1040 if you are doing a 1040. You're going to do that anyways, right? Let me show you something else, right? So let's see. There's a phone number you can call. There's no need to respond to this. Okay, that's my point. But if I go back and look at 6174A, okay, it's a slightly different letter. I'm going to show you this down here. Okay. Now, 6174A, if I go to the website with the lawyers, it's mentioning 6174A, right? And it says down here, it's saying you don't have to respond, right? But it's saying you have to respond to the 6173. Why? What's the difference? It requires your action, right? The letter might say what you need to do by the respond by date above. If you failed to file, if you made a mistake, if, it doesn't know. The IRS doesn't know. Because if it did, it would send you a notice that you underreported or that you failed to file a tax return, right? It would be specific. So this is just trying to scare people, all right? Now, the other telltale sign to look for, there's a couple things I'm going to show you. So you can tell by the language, it's so generic that it's not even based on your individual master file. Now, I know I keep using these terms. I want you to do this. Write down this number or go check it out while I'm talking. You can go online and look at IRS form 4506-T. The T stands for transcript. Okay. It's IRS form 4506-T. And you can open it up. It shows up on your computer, or you can download it, print it, you can fill it out, and you can get the last 3 years of all the 1099s and the W-2s reported to your tax records, okay? Your individual master file and business master file. You can also, believe you can do it online. You can go back to the last 3 years, and then if you have another 3 years you need to look at, you just do another 4506 for the other 3 years, okay? And you can do that. That is the only thing that matters. That is the only thing, those records are the only things that create a duty for the IRS to do anything. This language in these letters, that doesn't create a duty. The IRS has no obligation to do anything. This is a phishing exercise, right? Phishing, fraudulent, inducement to collect your information, okay? It's what they kind of like trying to see if, like, call your house to see, right? They're just testing to see what they can get, right? Who's going to respond. It's a sales letter. It's a direct response sales letter, okay? Now, the other thing is, if you're filing a 1040, or whether you understand, if you're filing a 1040, it's under penalty of perjury. You're going to do that once a year. Okay, let's say we're required to do that for argument's sake. Are you required to testify twice? You're certainly not required to testify twice about the same set of facts, okay? So anybody who's asking you for additional information regarding things that you would report on your 1040 and is asking it under penalty of perjury, like for example, maybe your accountant is saying, list your cryptos and here's a form to fill out, and the form is under penalty of perjury, that's a problem. You never have to testify twice under penalty of perjury in 1 year for tax records, okay? You do it once, that's all they get, it's on the 1040. Anytime someone else asks you for something else in addition to that, like supplement your 1040, no, your 1040 is your complete testimony. You're not required to supplement it. This is creating a liability that I declare under penalty of perjury. That's creating a liability. You don't have to do this, assuming you even have to do the 1040 under penalty of perjury, okay? I'm not even gonna talk about that. But you don't have to do it twice, all right? Now, this information, they're asking for information, right? Anytime the government asks for information, it has to do so on a form that's been approved by the Office of Management and Budget, and this is a law under the Paperwork Reduction Act. You can go look it up. So if you look at your 1040, I believe that the 1040, what was it like? What's the form number? 1545 or something like that? At the top right corner, it's an 8-digit number. It's like 1545.
1545-0067
Yeah,
OMB.
yeah, that's your 1040, right? So that form has been approved by the Office of Management and Budget for the collection of consumer data. And you can provide your information. Now, what happens if, like, for example, on this form here, they're not asking you to fill out this form or anything, although there is this penalty of perjury, right? So they're asking for information. This letter has not been approved by the Office of Management and Budget. The defense to refusing to fill out this form is that the form has not been approved by the Office of Management and Budget, and I refuse to use this form to give you the information you're requesting under the Paperwork Reduction Act. And that's a legal defense. You're not held liable, okay? You don't have to say Fifth Amendment. You can just use the Paperwork Reduction Act. It's very simple. So just so you understand, it's very important to know if the way in which information is sought to be collected from you, okay? So basically, this is a sales letter. They're all sales letters, right? And they're trying to get you into this quagmire of chasing your tail, really. And in the end, what they want to do is create more liability, create more liability. When you go to your lawyer, and I've said this so many times, and it's so applicable almost every time, in that the lawyer, the attorney, is practicing the art of attornment. It's taking your property to give to the state. Okay, you can look up the history of the use of that word. It's had several slight connotations over the years. It's ancient, really. It's back in the days of England and this sort of thing. But really what they're doing is it's the taking of property. And the way it works is attorneys are bar members and they're allowed to be involved in this where they have no interest in the property. Okay, it's just like being a real estate broker. The reason why you need a license for that is because you don't have an interest in the property that you're selling. Now, lawyers don't have licenses, they have bar memberships. And so that works like a license. And the reason why it works that way is because the attorneys are not permitted to have an interest in the property that's the subject of the litigation. And that's what they're doing. That's the definition of attornment. Take your property and give to another, okay? They're not trying to protect you. They're not your advocates. So anyways, that's the idea here. Now, and I'm gonna pause for just a second, see if anybody wants to talk about this, have any questions. If I talk too fast, tell me. But I want to go on and I'm going to show you what the real situation is where the IRS may be moving on a process where it's going to, let's say, put a lien interest in your property, your real estate, and what you can do to prevent that, among other things. Anybody want to ask me about these? Anybody getting these recently? Good. Glad you're not getting them. Yeah. Yeah, Mike?
Just I make sure I understand correctly. Were you saying that with the paperwork attach all these schedules and these other forms?
Yeah, the Paperwork Reduction Act precludes you from having to, if you think there's an obligation for you to fill out something under penalty of perjury or just fill out a form that someone you got from a government office, the form has not been approved by the OMBs, then your defense is that it's not been approved and I'm not required under the Paperwork Reduction Act because it's not approved by the OMB. If I'm going to tell you the whole thing, so that's what you would understand.
So,
so always look for that. Every time you get
so can you file?
Unless it's like a civil discovery in federal court, right? Then there's a different set of rules. But when it's just you interacting with the agency, especially over data that you're already going to report on a 1040 or could report on a 1040, and it's asking you for supplemental data, you never have to do that. And it's not about you just saying no, it's about you being intelligent and saying, well, no, your form, first of all, is not even approved by the OMB, and so I'm not required to do so under the Paperwork Reduction Act. Okay.
Okay. But that doesn't apply to like all the different schedules that are attached to your tax return, or is that something different?
No, because your tax return is already approved by the OMB and all the schedules are part of that. So yeah, they got that one. That's fine. Yeah, no problem there.
Gotcha.
Yeah. So so I've been talking to a few people, and so it's funny. Every time I ask people this, they struggle with it. People that own houses, okay? You live in a house, you bought the house, you committed to a 30-year debt, a long-term debt. It's probably the biggest purchase of your life. And then I ask you, what instrument establishes that it's your house? What does that mean, that it's your house? Are the only person, you are the only person on the earth that has the right to sell the property. Unless you're using the house to make drugs or something like that, and the government can take it through confiscation laws, that's different. Okay. I'm just saying, if your name is on the title, the quit claim deed, that means you have the exclusive right to sell the property, or whoever's on the title. Okay. So when I ask you for the deed, I hear this silence. What's that? I say, well, you own a house, right? You own a house. It's important. You should know how you own the house. Come on. You should know how you own the house. And you own the house because there's the seller quit his claim and deeded it to you, conveyed it to you on a document called a quit claim deed. All right.
Or sometimes it's a warranty deed.
Correct. It's a warranty. And what is warranty? What does that mean? There's a guarantee or not. There's a limitation of liability, right? Warrant.
Google, navigate to Cape Coral.
What's that? What about Cape Coral? What? All right. So anyways, it's important to understand this because if you're looking at a situation where the IRS may collect or some creditor may try to attach your interest in the property, you need to understand how you have an interest in the property so that if you can or want to, you can change your interest in the property. You can change your interest in the property if you know how you acquired it in the first place and understand that because you have the exclusive right on the whole planet, that you can do many things with that right. One of which includes conveying the title of the property, retitling how the property is recorded in the county records. So if John Smith is the owner of his house because by virtue of the quitclaim deed, he was the grantee from the seller who quit his claim and deeded it to him, The seller was the grantor, he was the grantee. Now John Smith is the owner of the property by virtue of the quitclaim deed that's now public record. So everybody in the world knows it's public record. John alone can sell the property or choose not to. John alone can convey his interest in the property however he wants. He can give it to his neighbor and move out of the neighborhood if he wants. He can sell it to his neighbor and move out of the neighborhood, whatever. He can deed over the title of the property to an entity or a trust or whatever for whatever purpose. We like to use the method of deeding the property, conveying the title to a limited liability company for estate planning purposes. And if we want to make it true where the beneficial interests are not changed, sometimes we want to do that so we don't invoke the due on sale clause with the mortgage if there's a mortgage. We just make sure that the title holders are only the title holders. Maybe it's one guy, or maybe it's husband and wife, right? Of the LLC, and nobody else is on there. Now, sometimes we can cheat. So if I've shown you how to do that, that's true also. But to get it correctly, to retain the beneficial interest, the title holders have to now be the owners of the LLC, and nobody else can change that. You can't add another party, okay? Now, sometimes you can get away with it, I'm just saying. But technically, to get this right. So when you record, so when you do a quitclaim deed like this, the title holder that's today, like John Smith, he would be the grantor this time. And the grantee would then be the entity he's using, like a limited liability company or trust, okay? And so once that document is executed, and I think that all has to be notarized. Once that's done, it's recorded in the county. Now, if you're conveying the title for estate planning purposes and the beneficial interests remain the same, and sometimes the states are very good about checking to make sure. This is another reason you have to understand what you're doing. The state will not charge you like a value tax on the transfer. Like in Florida, it's called the documentary stamp tax. So it's a very large amount of money. It's like 20% of the value of the property plus $20, you know. Whereas if you show that it was just for a conveyance for estate planning, then you'd be exempted from that 20%. You would just pay the $20, you see. Same thing in California. It's a big difference. So that's another reason to keep that in mind, to understand what it is that's going on there. You have to convey the title in the public, and you can do so in this way. Now, where are we going to do this? Let's say I'm trying to outrun the IRS, right? I don't want the IRS to send me a notice of lien before I get rid of the house that I'm living in, right? I want to retitle it. And you can legally do that. And it would not adversely prejudice the United States in any way. It doesn't prejudice the creditor. Now, if you do it kind of early and defeat them or something, maybe they can argue fraudulent conveyance. I've always done it no matter what, especially with the IRS. Now, if the IRS wants to take your house, likely they'll just sue you, which creates a very difficult situation for the IRS. But sometimes you got to fight them pretty hard. But normally what happens is you don't want a creditor to put a lien on the property. So let's say you want to sell in 5 years, right? If there's a lien on the property, you're not going to be able to sell it without paying off the lien holder. It might take a big chunk out of your equity, right? This is what they hope for. So if the IRS is maybe putting a lien on my property in the future, and I want to do a quitclaim deed, I can certainly do that for estate planning purposes. And yes, that would legally avoid the lien attaching. Now, let's say I'm wrong. Let's say there's a perfected lien interest. I know they do a notice of lien. I understand how this works. And it does still encumber the equity of the property if you have an interest in the liens against you. So let's say the IRS already has a lien interest in your property, okay? Chances are it's not going to try and foreclose on your property. It could, but it's probably not going to. It's just going to sit there, and the lien interest will grow until it expires, and then it'll go away. And that takes 10 years. You have to file returns in order for that to happen. So if you were to convey the property after the lien interest is filed, like the notice of lien was served on you by mail, the lien would follow the property. The lien would have already been attached to the property. So when you convey the title, the government's not prejudiced. So there's really no complaint about a fraudulent conveyance because the lien follows, right? So the lien attaches to the new title holder because it's on the property. Just understand that, right? so that's another reason why it's not really a fraudulent conveyance. It's hard to make that case if you understand what's happening, because even a judgment lien will still stick to the property. So if the judgment lien was already filed and then you convey the title for like I'm describing, you would simply preclude new creditors from the old one that was recorded before you did the conveyance, the quitclaim deed. That will attach to the new title holder. So just keep that in mind. All right. You'd have a new debtor. You don't want that situation, but if you do have that situation, just make sure that new debtor, the LLC, for example, doesn't have important things like a bank account with cash in it, because it then helps the creditor from then taking the money. But I just wanted to go over that because so many people I talk with have houses and they don't even understand how they can establish that it's their house. There's a document, right? And it's in your closing papers. It's not just documents, okay? You got to look at this stuff and read it. It tells you what the document is. Understand what those terms mean. Someone has quit the claim on the property and conveyed it to you. Now you have the claim. You have the exclusive claim. The mortgage company has a different claim. It's a lien interest in the title. It's not the title holder. It's a different interest. You have kind of a superior interest in the property because you can sell it, right? No one else can sell it unless there's a foreclosure. So, that's kind of close to your lien interest. And your interest is not really a lien interest. It's a title interest, okay? Everyone else is a lien interest. So as long as you're not violating terms of a mortgage or other liens on the title, you're the king, right? That's how it works. Even though our system is feudalistic, you're still, it's still capitalism, right? Even though it's a feudal system, it's about the best we have. But anyways, yeah, so I'm look here real quick. Mocha's not here, so I have to kind of do this. Yeah. Okay. Yeah. So yeah, so this is being recorded, guys, by the way. Karen, I saw your hand up a while back. Did you want to ask something?
I just have two quick questions. I'm writing a quick claim deed right now, and it sounds like I want to include the wording that it's being conveyed for estate planning purposes.
Yes, you should.
So that's keeping to include. And my other minor question is the addresses to use for the grantor and the grantee. I was thinking they would be the same address and a PO box where like you can really receive mail, not this
You can
fixed
do that.
stuff.
Yeah, you can certainly do that.
Yeah.
Yeah.
Okay, great.
Yeah. And I think Teresa, you were asking. I saw Teresa's hand up too. That's what I recall. Are you still there, Teresa?
Yes.
Oh, there you are. Okay.
Well, Karen actually asked the same one, but I'm still a little bit, I've always looked at my warranty deed.
Yep.
And I think Ray did say, I mean, I looked through so many papers looking for that damn quick claim thing, and there isn't one because I'm the only owner of this house. I mean, I'm the only.
Yeah. Okay.
No one's ever bought this house since it's been built. So it's a warranty deed.
Okay.
I called the county clerk and they said, you don't have a quick claim deed. So I guess I'm just understanding anytime that you've bought a house before that has been owned by somebody else, that's a quick claim, right?
It could be like that. It depends on your statutes.
Okay. And then the other question, now that you have me here, it's a dumb question and I asked Karen about it, but it's, why not, Wyoming?
Wyoming's a good state for an LLC, if that's what you're asking.
Yeah, that's what I'm asking. And the person that I was talking to today said, well, why are you doing it in New Mexico? And I said, well, I live in New Mexico. And I know that you, JJ, said that New Mexico and Colorado are the easiest. And then he was talking about Wyoming. So,
Everybody has his brand.
gotcha.
If you ask him why, he may not, I don't know even what kind of reasoning. My reasoning is kind of equally absurd, but I have a certain interest from my client, and that is I want a state that's not going to send him lots of form letters and make up numbers and say you owe taxes. So that's why I choose the states that I choose. And Wyoming is one of those states, but no state offers better protections. It's all equal. Even California and Texas make you have equal protections. No state is special. No state is better.
Okay. I think there was another question in there, but if I,
Convenience only.
huh?
I do it for convenience only because in all 50 states, you're still going to get charging order protection. That's all I care about. This allows me to divest my exclusive rights and property, still benefit from it, and still block the entire world from reaching in and taking it. Every
Okay,
state does that. No state special.
okay. There was another question in there, but I think that's it. If I think of it, I'll jump back on, but thank you.
Okay, sure. Yeah, Elaine, what were you saying about recording on my computer? Oh, you're telling everybody else to do that. Yeah, you guys can do that if you want. Thanks, Elaine. Yeah.
There's a question
Let's make
asking
record.
if you have to sign a 1040 form or sign without prejudice. It'll be rejected if you don't sign
Yeah,
it.
just sign it. It's so what? If you're gonna sign a 1040, sign a 1040. It's okay. There's nothing special. I mean, I know there's for decades have been all this talk from protest groups, and they don't know really. They're trying to understand things, but they just don't understand. They don't understand how to look at financial risk, liability, and where there's a duty. Okay, so the whole IRS collection process comes down to this. Like, for example, you can file tax returns and never pay for your entire life. If you never file tax returns your entire life, you can get W-2s and 1099s every week, and the IRS will ignore you. This is a weird system. There's no law requiring anybody to have an SSN, but if you go out into the world and do things, people tell you that you can't have access to things if you don't have an SSN. And it was heading on the path of being illegal, but the government really wants people to have one, but they don't want to make a law that says you have to have one, but they make it to where if you want access to things in society, everyone says you have to have one. So this is the kind of system we have. So liability comes down to this when it comes to the IRS. Your concern is that the IRS has incurred a duty to reconcile, a duty to figure out who owes what money and then go get it or give it back. That's what the IRS's job is. It's to settle the claim, all right? And the way it does so is by getting reports from people that send you money. And when it gets those reports, if before you filed a tax return, it's going to have an open account ledger. It goes from year to year. And so the IRS is going to want another 1040 to then reconcile that, okay? So to get out of that cycle, I'm not telling you how to do something illegal. I'm just telling you how the accounting works. Don't create a duty to reconcile by receiving a 1099 or a W-2 with your SSN in your personal name. That's why using limited liability companies to manage cash flow. You cannot do this with a W-2. You can only do it with any other type of income. You just can't do it with a W-2. With a W-2, if you want out of that system, you have to stop getting a W-2. You have to get, you have to have some sort of other income other than wage income, right? So the liability comes in when you end up paying the bill. That's how it works. So what you're trying to do is avoid giving the government a duty to reconcile. That's on you. And then what I'm teaching people is how to legally avoid creating that duty. And it's actually a pretty simple process. And this is how I explain it. I show you how to change your property rights. Okay. I don't know if that really addresses that, but there's a lot of talk on the subject. That's, I watched in the 90s when I was looking at this stuff in the 90s, and I watched people just get annihilated. And the common denominator was that many people, there was this wave of tax protesters that were telling everybody, if you put all your property into a trust, then you can stop filing tax returns. They don't understand anything. That's why people still talk to me. They ask about, hey, John, what about this 508c3 or something like that? And I say, well, what is that for? What are you doing? Just because it's a thing, what is that? What are you doing? How are your property rights changing to avoid a liability that you've already had, or the perception of a liability? So, and so I watched these people get annihilated, and the common denominator was that the people had stuff. Their trust organizations didn't remove their stuff. They still had the rights to sell the stuff. So here's where I realized if you go look at 26 USC section 6331, it says very clearly in there. I know the section paragraph A. I'm talking about paragraph B. It says that the IRS can levy upon the property or the rights to property of the taxpayer. It's not just the property, it's his rights to the property. If he has the right to sell something, the IRS can take it. If he has the right to spend money, the IRS can take it. So, do I need to have the right to spend money in order to spend money? I do not. If I work for a big corporation and I'm the accountant for the corporation and it's my job to pay the bills, do I have a right to spend that money however I want? No, it's the corporation's money. Therefore, it's not my right. Therefore, the money in the corporation cannot be taken for my debt. That's a big corporation, right? And so we're not easily able to be in that situation. So here's how here's how you can create that same scenario for yourself individually by simply using a limited liability company. It does the same thing as if that guy who's the accountant for IBM, a company with 2 members. In the worst case, you can do with 1 member and still get very close to the, not being collectible, this sort of thing. But to remove the property from your estate is the language I use, and make it uncollectible, isolated, remote from your personal liability, you need another owner of the limited liability company because it is seen as a separate party, an entity. Okay, so it gives you the same protections that accountant has and the corporation has. So the corporation wouldn't suffer a loss of money because the employee who's the accountant is paying the bills and just happens to be the signer on the account. You see, there's still a separation there. Right, Teresa?
Yes, and now I'm going to ask another stupid question.
Okay.
What is the difference between the irrevocable trust? Because I did get with this other company a few years ago that is saying that the irrevocable express trust is the only one that can't be pierced.
All trusts can be pierced, even if they're perfectly written. And I'll give you an example. If I'm going to use a trust for something, and they are useful, by the way, you have to understand a trust is going to more than likely end up in the need for cost of litigation. If you understand that it's okay with you, then fine. And I don't like it either, but one of the nice tools is if I'm going to use a trust, I want it to pass the test of whether or not can the judge order me to remove the property from the trust to pay a creditor. He can do that if the trust corpus says that the property that I conveyed to it was conveyed revocably. If I have the right to revoke the conveyance. If it's conveyed irrevocably, then the judge cannot order me to do it because I don't have the right to do it. So that helps. But here's how it works in reality. So let's say a creditor wants to test my relationship to the trust because it's a good test, because a lot of times trusts aren't written properly. Nonsense in there. So you want property rights expressed in the trust in a way that are contingent upon things that haven't happened yet. But most trusts aren't written that way. Most people don't understand that, right? So the attorney, the creditor, will use the rules of civil procedure. This is your biggest weakness, the rules of civil procedure, and he will seek discovery on the trust. Now, he can't do it until he wins. He's got to be doing it in post-judgment discovery. So he has to win first. Then he can use these rules. And you have to answer the question, by the way, once you're in post-judgment discovery. So he can subpoena the trust corpus, the declaration of trust, make sure everything was written properly. And then he can look at the rights of the beneficiaries and the rights of the trustee, the settlers, and how the property was conveyed. He can call for an audit. And even if it's written perfectly by another trust attorney that just does this for a living, most of the time a lawyer can pick it apart and find something wrong with it that he can go to the judge, and the judge will just give him that little crack, that little window where what will happen is he would be able to step into the trust or do something, and it would cause the other party to have to say, okay, let's do a settlement. This is how it works.
So what does the LLC do?
Okay, so if I have a client that's got a trust organization, like there's one client, a gentleman in Georgia, and he had about $5 million of real estate. And I don't like to change what the client's already done, because especially when I first meet him, because I don't know what planning and thought he put into organizing something. It's not for me to undo it unless it's quite obvious to me that it needs to be undone. So, and like in that guy's case, all I did was ask him this one question. I said, "Who's the trustee?" He said he and his wife. I said, "Who's the beneficiary?" He said he and his wife. I said, "Okay, you don't have a trust. You just have a document with a bunch of words on it. That's not a trust." Because a trust is organized for the benefit of beneficiaries. The trust owns property, and it holds the property for the benefit of beneficiaries. The trust, the trustor, and the settlor, okay, the same, these are all the same. These are the people that convey property to the trust. And if they're also the beneficiaries, well, then who do they convey it from and to? That's self-dealing, right? So what's the remedy? It's my LLC.
Gotcha. And so they paid, so your clients paid for this faux pas?
I fixed it. I fixed the trust, and I didn't even really read the trust. I just looked at the declaration, and all I did was change the trustee, because you can do that.
Mhm.
There's a provision in there for doing this. So we changed the trustee to a limited liability company in which they were not the owners, to make it sure. And so the LLC then was, I think they were using their children somewhere. So then the LLC was the trustee. Now keep this in mind. The trustee is the owner of the property as trustee. So if you're the trustee and the beneficiary, there's no difference, right? There's no distinction. So you don't have a trust. You just have an alter ego. And I watched this in the 90s. The IRS would, I think they were watching everybody do this in these groups. They're probably in the groups. I remember I used to give classes every year. In fact, I was giving classes every Thursday night back in the 90s. We used to have like 80 people in the room, you know? And one night after everybody left, one of the people introduced himself as an FBI agent. I didn't know the FBI was watching.
Oh my
You know,
God.
we ended up working with them on some cases, you know, but they just wanted to check us out, you know, so you never know who's there, who could be doing that stuff. So that's what you do is, you know, you convey the property in that way. So
In an LLC.
use an LLC in that case. So what you're doing is the owner of the property is the LLC. It's just governed by the trust. So now the LLC is the trustee, and it's still subject to the terms of the trust, but there's a separation and it makes it a trust. I don't know.
Okay, but in my case, I'm not, I don't have a trust. I'm just started with you.
LLC makes it easier. Yeah.
Okay, gotcha.
And keep in mind, if you have an irrevocable trust and you're using it like your personal piggy bank and you're using it like a revocable trust, and
Mhm.
someone analyzes it, and he can analyze it. The judge can actually look at the trust agreement, and he can look at your bank records and see if the bank records are consistent with the trust contract. And if they're not, he's going to look at your bank record and say, that's the trust contract.
Hmm.
Yeah. So if you've been using it like your piggy bank, he's going to say, well, you don't have a trust there, friend.
Mm.
I'll still
Wow.
do that. You can reverse engineer a contract with just the transactions.
With
Yeah.
the transactions of,
Well, usually an entity is going to be dealing with property and property rights. Usually it's going to be money. So if I look at how the money is coming and going, then I can tell what in many situations that I've dealt with, there's no written contract, but it doesn't matter because I can always establish the terms of the contract by what people are doing.
So you have a bank account attached to the LLC?
Many people do. It's convenience. It's the purpose. I mean, you're going to put money in the trust for a thing, you know, maybe there's costs and maybe it's running a farm or something, you know. So sure, it doesn't have to be. You can have a trust that just holds the title to some real estate.
Right, but we were talking the other day, you and I and Karen, about the fact that if I do make any monies from my other business,
Mhm.
I should do it as a, what do you call it? A independent contractor. And when I sign the contract at the end of the job, it's a, I put the LLC down.
Right. Your LLC is the contracting party, and then you would just sign for the LLC. Make sure you give yourself a title like manager or VP.
Okay.
Yeah.
Okay, great. Thank you. And I'm so sorry I have to hop off. I would
That's all
love to
right.
stay.
Good question. All right.
Thank you.
Yeah, living estate. I don't know. I mean, I don't know why you'd want to do that. I mean, I have to know some more detail. I mean, anytime you hear things like this, living estate, I'm thinking probate and taxes. You know, these are the types of things that lawyers do, attorneys.
John, have you ever made the LLC the trustee of a revocable living trust?
Yeah,
Okay,
Yeah.
you do that too.
yeah. I don't like to do that, but it's I mean, really, you're actually then getting the benefit of the LLC because the trust is not going to serve the purpose for which many people intend. Many people want the benefits that I'm actually giving people. They think they're getting them because you have some fancy name trust or something. They think the name of the trust is something special. You know, so, but what I'm doing is it comes down to changing the property rights. That's why I ask people, why are you using that particular type of entity or trust or structure? What are you doing? What risk are you managing? They don't even know. They just thought it sounded cool. A Panama IBC, yeah. What is that doing? I don't know.
Well, revocable living trusts are usually just used to avoid probate. I mean, that's their main thing.
Fine.
At the
Then
death is the last.
just know what it's for. Yeah. Just know the purpose and then use it for that purpose. Just like whole life insurance. Don't use it for an investment. It's insurance. It's managing risk.
So,
So yeah, just understand
so
what it's for.
limited
That's why I like to,
partnerships, they don't
ask
have
for total
charge and work
questions.
protection like a
Do
LLC,
not-
do they?
That is correct. LPs do not. However, you can get them. It doesn't, well, it tends to require litigation to defend. It just, that's, you know, why not just take your limited partnership and make it the operating agreement of an LLC that you register with the state? Now you defeat the desire for litigation simply because of charging owner protection. It's guaranteed. Just because you got 2 or 3 owners, it's guaranteed already.
Hmm.
Hey, John.
Hi, John.
How's-
Hey, I
Hey.
had a quick question. I don't know
Yeah.
if you can answer it in a quick way or not. So when you have the LLCs and the trust and all that stuff, and you was talking about the judges can look at the trust and see how you're using it, if you're using it for a personal piggy bank, what do you use to pay your utility bills or your regular stuff? How
Well-
do you operate all that?
I just have a personal account unless I'm undergoing levies. You can use an LLC. You can pay your personal bills out of an LLC.
Okay, so if you are using an LLC to pay a mortgage and stuff, that's not going to put you at risk for anything if somebody
No.
tries to discover
No, that's
that.
fine. And also you can still do it with the trust. Just make sure that it's consistent with the authority in the trust. If that's what the
Okay.
trust is intending to do, make sure that your property rights are separate and established correctly, and that the trustee is saying as beneficiary, maybe, or as maybe as trustee, you just make sure that in the trust, you're able to do that as part of the deal.
Okay. Well, I've been using an LLC for years and I just pay my personal bills out of it.
Yeah, that's just it's a faster way to do it than just putting the money in your personal account. And I'll tell people to do that, pay from the LLC when they're undergoing like a levy situation. Why should I expose the money and put it in my personal account just to pay a bill when I could just pay the bill from the LLC? And then if I'm going to file a 1040, I'll just report that as part of my income.
Well, see, I've never filed on that LLC. So is that a
Well,
problem?
you don't file a return for the LLC. I'm talking about filing a 1040.
Right. Yeah,
Yeah.
I don't file a return on the LLC, but I'm using it to pay personal bills. So is that
Fine.
okay?
That's fine. Yep.
Okay, cool.
Sure.
I always wanted to make sure that I was doing that the right way.
Yep. Yep.
Okay, thanks.
All right, John. Andrew.
John, how's it going? Hey, sorry, I got kind of sidetracked. I meant to get back with you on I'm the guy
Did you
who
wanna
sent
ask?
the video about the dude, in court. He had a blank document in the court trial,
Okay.
for, when we were doing our, they were coming for me for a debt collection.
Yeah, the blank document. That's
Yeah, the
You're
blank
like robots,
great
aren't you?
shot. Yeah, I'm that guy.
Okay.
So anyway, no, and I meant to get back and anyway, life. But I think I had I was just trying to determine, you mentioned including debt collection and LLC strategies, but I think you were alluding to me either setting up a meeting or getting another program. So I just wanted to clarify because I definitely want to invest again and start on that path, that learning path again.
Well, generally, when you're gonna make an important investment or a purchase, I recommend using a limited liability company for the purpose of removing the property rights or keeping it away from your estate. That way, I don't care if you have debts or not. I don't even need to know that. I just think it's a good practice. If I'm gonna, let's say, buy some investment real estate, right? I'm probably gonna have to buy it in my name and get the mortgage in my name, but I'll convey the title to an LLC, so it removes it from my estate. Just because it's good use of, it's a good protection, right? Same thing with a business. Use an LLC for that purpose.
Actually, so I'm speaking to those programs, but it was I think because I had been in the program previously, you mentioned those two programs, but I think there was another program you mentioned in our email for Taxpayer Data Protection Act. And so what I was trying to determine was if you were kind of directing me over to that program, or should I just get in a call with you, or which would be better?
I'm not sure. I don't know what that is.
Okay. I may just email you again and then try to get,
Yeah, just let me
try to
know.
refresh the memory.
Okay.
And then I can figure out if I'm best served by like just getting on a call with you or getting straight into another program.
Yeah, just call me.
Yeah.
Yeah,
All right.
let's just talk. Yeah.
Okay, cool. Thanks.
Thanks. All right, Mike.
If you're paying your personal bills out of your LLC and then you want to file a 1040, you just claim that as other income, the personal expenses?
Yes, correct. Don't use the schedule. Just claim it as other income.
Yeah, gotcha. Thanks.
Yeah, good question. Hey, Karen.
I'm piggybacking on Mike's question. The way the IRS forms are, because I did my tax returns this year, they put that other income question or place on, I think it's Schedule 2, but it's not on the main form anymore. And they ask you
Okay.
to briefly describe it. And so my question is, and it's the last of a very long list. It's like 8Z on whatever the form is.
Okay.
Do you think putting like 8, 10 to 20,000 as other income would be a red flag for the IRS?
I don't know. I don't know what a red flag means. You mean a
Oh.
warning or something, or
Oh, I
trigger?
don't know, like flagged for just an
Okay,
audit.
imagine a person who's running he's doing landscaping and then he's painting houses or something, and people pay him with checks and cash. And so you'd report it that way, because what the IRS is trying to do is find out if it's coming from a company that's not filing. I mean, that's how I look at it. That's not literally what they're doing, but you don't want to be talking about an LLC that's paying you money when it's not filing a tax return, not because you're doing anything wrong. It's just that the IRS would then ask for a K-1 or something, or a 1099, which is not required. It's not even required for a payor anyways. It's just how the system works. Right? Does that make sense?
So, but I'm just kind of confused. So you wouldn't really, well, you wouldn't in the description, you wouldn't reference an LLC, anything about the LLC.
No,
I know
exactly.
that. I know
Right.
that. But the amount could be kind of high if you're paying your bills out of your LLC, and
It'll be fine. Imagine a person who runs vending machines, right, in town, and he's got so many, he's making like 20,000 a month. What about that guy?
he doesn't. Well, some people would put it on a Schedule C, right?
Well, sure. But a person like that, I mean, he could do that. But really, what does he do?
But you don't have to. Like, there's something like you could argue that you don't have to put it on the
I
schedule.
mean, it's a vending machine. But use other income. And then if there's a question about it, say, well, you're lucky I reported it all. You wouldn't have known about it had I not reported. And I did so under penalty of perjury.
Yeah.
So what's the problem?
Yeah. Yeah. Okay.
Yeah.
Okay, great. Thank you.
Yeah, okay.
Hey, John, it's Jolene. I can't figure out how to raise my hand.
Oh, yeah, no problem. I see you.
Anyway, I know I turned it on because it must be easier. Hi, Ray. So we did a program and you made me uncollectible, and I think I pretty much understand that. So
Okay.
but I've got a company and they may want to hire me, and they're only W-2. So
Yeah.
how do I organize that? Will they hire my limited liability?
They cannot.
They
They can't
cannot,
hire
right?
you, right?
So
W-2.
is there a workaround? Do I take the income and put it in my LLC trust account, bank
Okay,
account?
what risk are trying to avoid? Are you getting IRS levies or something?
No, no, I just want to protect it from creditors.
Are any creditors suing you?
They probably will be.
In what state do you reside?
I'm in Florida.
Okay, so Florida, I believe, allows a 25% wage garnishment. You could probably have it reduced, but I generally don't recommend that.
Okay.
So yeah, I mean, if you're not going to avoid that unless you go to the
All right.
extreme example, which I probably mentioned to you, right? You just create a judgment lien first.
Yeah, right. Be the first in line.
So it's just some paperwork, but you can pull that
Yeah,
off. Yeah.
yeah.
That's the only way around that one. But yeah, they literally cannot have you as a contractor if you don't meet the criteria because they're going to get in trouble, the employer.
Yeah, I think actually I would be an employee.
Exactly. Yeah, they
Mhm.
have to treat you like an employee. There's
Yeah,
criteria and they would get in trouble. And
yeah.
it's just like a cashier at a grocery store. You know, you're never going to be an independent contractor as doing that. But I know the trend has been, I talked with some of these because I like to talk to business owners. And my barber, I asked him, I said, how do you structure all this? Are these all your employees? He goes, no. He goes, everybody rents from me. He has a
Mhm.
really nice business going. He has like 10 or 12 guys cutting hair, and everybody rents a chair like you rent a taxi cab.
Mhm.
So these guys figured it out, you know.
Yeah,
They don't have employees, but sometimes you just can't do it.
yeah.
Yeah.
All right. I still might when I think I still will email you just to double check on some things.
Sure, yeah, let me know.
All right. Thanks, John.
Sure. Well, that's all I want to talk about. So just, I know we have a tendency to get scared over things. I'm no different. I just happen to know about this area. I mean, I could be scared over something else, right? Until I understand it better. It's just like way back in the late 80s, early 90s, before I even thought I would even do any of this work, I had lots of credit card debt, you know? And instead of being afraid and asking a lawyer or something, or asking my friends, now back then we didn't have internet access to data. I literally had to go to the law library I'd never been before and I looked things up, not starting with not even knowing what to ask. And I did that. And then once I understood some things, I went to the courthouse and I started watching these idiots in court. And I realized they were idiots in court. And I realized that if I could write something halfway decent, I can beat them, which I did at first until they realized there was somebody out there who was actually like paying attention. And they started saying, "Hey, let's go fight it," you know. So it became this battle across the whole country, and then, here we are. So they'll do that. But anyways, that took me years to do. But since I've done that, and I now have the video, and I said, "Look, here's the punchline. Here's the punchline." First of all, you can look stuff up on the internet. If you get a letter from the IRS, don't even read the letter. If you want to know about it, what you do is look around the border of the letter and look for the form number. That's what government agencies do. They have form numbers, right? Now you go on the internet and search for that form number, LTR or LETTR, whatever, and then you'll probably find that letter and there'll be explanations. Somebody's going to talk about it. That's what you do, right? I mean, that's an example. Now we have all these tools. Yeah, okay. All right. Yeah. So anyways, it's interesting there. Just like I was showing you guys the other day, a couple of weeks ago, about the congressional record. This was what I was showing you about the steps toward a British Union, that article. That was an appendix to the congressional record. That's not the actual congressional record. Someone appended those essays to the congressional record to talk about this stuff, to get it into the public. So anyways, it's all there. But the government has all these restrictions. You'll start, I mean, if you're a US citizen, if you're living here, just get used to this, right? There's all these things that the government has to do before it comes to you for something. Make sure all those things are present, you know. Any questions on that? You guys can probably handle it, and we have all these discussions, we can always bring stuff up. But no reason to be afraid, lose sleep at night. Things take time too. When it deals with law and property rights and money and cash flow and things like that, those things take time. And if you're kind of halfway diligent and not just like scared and then you like stick your head in the sand and don't do anything and hope nothing happens and think to yourself, I haven't heard anything in 2 months. That means it's gone away, right? If you're paying attention, you'll usually figure out what's going on and maybe who to talk to. Because sometimes I have to talk to people. Sometimes I have to maybe call a lawyer and ask for a reference, you know? I don't do that so much anymore, but you know, in the early days, I've gone to lawyers' offices and asked them, you know, questions when I couldn't find stuff. So, anyways, I hope that's the whole takeaway here. All right, y'all. Well,
Great call.
thanks so much. Appreciate you joining.
Thank you. Thank you.
All
Lynn.
right.
Awesome.
Have a
call.
great,
Enjoy your
Have a
weekend,
great
y'all. It's gonna be a
weekend.
long one, right?
yeah.
Memorial. All right, enjoy.
You too.
See you next week.
Thanks, John.
Bye.